Let's take a look at some charts on SNX for Brave New Coin. So SNX is similar to MakerDAO and DAI. The network lets you mint synths, which have a one-to-one backing that tracks the price of the underlying or external asset. So if you're minting an SETH, it just tracks the price of ETH. They also have inverse synths, which have a directional component up or down, basically. So you can mint effectively a long synth or a short synth. And like DAI in the MakerDAO or Psy, synths are widely available across many of the swap DEX platforms and used for all sorts of speculation across DeFi in general. SNX also has a staking component, they have a burning component, they have a layer 2 interoperability. They got a lot of stuff going on. There's 7 on the DeFi Pulse total value locked list. And if we look at that, they have currently around 2.4 billion locked in USD. This has risen substantially since December, January, when DeFi took off. So the entire realm of DeFi has exploded since January, and SNX has definitely been a part of that. The platform is a part of that. The token is a part of that. Usage of the token is a part of that, and all that is reflected in the on-chain stats I'm about to show. So synths are minted when the SNX holders stake their SNX as collateral, which is why looking at SNX locked is important to understand, kind of as a proxy of how many people are using SNX for its intended purpose versus speculation, or how many people are in the SNX protocol doing stuff with SNX. And you can see through July and October, it was quite volatile as far as how much SNX was in Synthetix. Dropped off big in January and then kind of stabilized since then. So there was definitely an active player in the market in a big way who appears to have left in the moment. This doesn't look too bearish for SNX, but obviously you want to see everything going up and to the right. You know, total value locked is really just a measure of price appreciation more than anything, and not necessarily token use or platform use or anything like that. Part of this could be related to ETH fees as well. Eventually, it may have gotten just too expensive for this particular player to do what they were doing previously, or it got cheaper to do similar activities elsewhere. That's my read on this anyway. Or the DeFi Pulse data is just wrong, which is always possible. Not just for DeFi Pulse, just for any website in general. If we look at the transaction counts in the line here and the transaction values in the mean, this tracks price pretty well. Transaction counts spiked in August, they spiked in mid-January, and have dropped off pretty heavily since then. Average transaction values continue to rise, likely because we're seeing less transactions because of the fees. So high fees, less transactions, higher average transaction values. So really the big thing for SNX or anything on DeFi right now is fees on ETH just need to come down for more people to participate, make it a big tent once again. Welcome one, welcome all, because at the moment it's just pricing out too many people with the fees. You know, if it costs $1,000 to do anything on some of these smart contracts, then you're pricing out anybody who's interacting with them on a small basis. You know, really you need like 10,000 US to not feel that pain of the $1,000 minting fee or whatever it is, the round trip interaction between onboarding and offboarding with SNX, stuff like that. The high fees encourage prolonged activity, but they discourage initial activity, and they discourage the smaller players, certainly. If you look at NVT, inverse metric of economic utility, NVT has kind of cruised between 0 and 100 since September. It's currently 104. So it's rising, which is bearish, which makes sense. We have transactions declining. We have active addresses in the fill here declining from all-time highs. Not that there were ever too many active addresses on SNX. It's kind of one of those things where you use it to stake or mint, and then the other assets become what you're transacting in or what you're swapping. Like I mentioned earlier, you can use the inverse synths to effectively short ETH, short BTC, short whatever's available there. We'll be using that in the Techme Capital ETH BTC fund when the time is right to basically long the inverse market, long the short side of the market. Which it's one way to short DeFi stuff or short BTC and ETH when the time makes sense to do so. Traditionally in crypto, long options are always there as far as ways to long the market, but ways to short the market haven't always been available. So the inverse synths are one way to do that. And if we look at Google Trends, just kind of says the same thing again. We had all-time highs in price, transaction counts, active addresses, and then since January, February, all that's fallen off, as has Google Trends here. And even though this is kind of a non-unique word to crypto based on Google Trends, it looks legitimately just the coin Synthetix and not some random actual real world word. So when this starts to pop up again, when transactions start to pop up again, active addresses start to pop up again, ETH fees go down again, then it's, for me, more appropriate to be bullish fundamentally on SNX, the token. I think the platform is great. It's going to be here for a long time. It's here to stay. It's got competitors in a thriving environment, so they will hopefully push each other to become better and better. If we look at the technicals, 5200 EMA, monthly pivots, VPVR, volume, RSI. So currently, this is daily KuCoin, by the way. I would never trade there, would never tell anybody to trade there, but they have price data that no other exchange has because they started trading SNX before everyone else. So price is above the 50, it's above the 200, it's above the yearly pivot, it's above volume, support, resistance. It looks okay right now. It just doesn't look, as good as ETH does, for example. It doesn't look as good as some of these other charts do. So it's hard to convincingly want to be long this based on opportunity cost. Now, if you think SNX is going to outperform ETH, for example, over a longer period of time versus just like the next 2 weeks, then it's certainly reasonable to long this. Trend-wise, it definitely looks okay. On the long side, it just kind of looks very milk toasty. It's not testing the 200 on the daily. It's not forming some falling wedge. It's just kind of consolidating, right? There's no there. Volume's declining. You had this rise up in volume, this fall, again, much related to price. We see this all the time. All of this stuff is connected. Transactions, active addresses, Google Trends, volume, price, intimately connected. You had higher highs on declining RSI. So there was a RSI div there as well. So all this is just resetting now at all-time highs. That's what it looks like to me. And if this does break all-time highs, I like 50. Just whatever some logical, psychological resistance makes sense. On the daily cloud, you're getting a daily bearish TK cross. So at this point, I would wait for, if I was trading this actively, I would wait for a bullish TK recross above the cloud. If you're following the cloud system specifically, exclusively, that's what I'd be waiting for. And it basically just tells you, okay, the trend has consolidated, it's ready to go again, it's ready to continue its bullish trend. We did have a Kijun bounce here, so a bounce where it needed to bounce. In the next month or so, we will know very quickly whether or not this is going to be an edge-to-edge move, sort of down to 15 from 20, or if it's going to consolidate, break the R1, break the R2, that sort of thing, to higher highs. You can see what the previous consolidation looked like. It took 4 months, 6 months. That was sort of pre-DeFi blow-off, so it might be a shorter duration this time as far as bullish trend continuation. But you can see what that looked like. It went below the cloud, deep below the cloud, went back above the cloud, retested resistance a bunch of times, had a bullish Kumo breakout with a bullish cloud. So if I want to get super confident on the long side of this, I want everything to reset just like it did in November, December, but equally as good as a bullish TK recross above the cloud. And if we look at the 12-hour, if you don't want to wait for the daily signals, you can always just move down a time frame, look at the 12-hour. Here's what the long entry looked like in late November, and you're looking for a very similar thing here. Again, I want to see all this just reset. The TK cross is bearish, cloud is bullish, price is in cloud. All this is just sort of all over the place, right? You want price above cloud, bullish, TK cross, bullish cloud. So for me, if I was trading this, I would just be waiting, let this figure itself out. Is it going to stay bullish? Is it going to retrace to 15? That sort of thing. And if you want to set bids on this, I'd look at the S1, I'd look at the 200-day moving average, just the basic low supports, breaking this low, that sort of thing. Even the previous all-time high. So anything between 8 and 13 is probably fine for a bid. If you're looking to catch some knives. And then lastly, on the SNX BTC chart, just picking some time frame that makes sense. On the 6-hour, it doesn't look like anything. It's really all over the place. Volume's declining, RSI is declining. It's below the monthly pivot. It's below sort of volume resistance. Yeah, it's just doesn't look too strong. You know, you can see since January how that reacted into February and how it's been since then. As a trend trader, this does not excite me, this chart. It's all over the place. It's a mess. If you want to wait for the 6-hour cross on the 5200 period moving average here, that'd be one way to play this, but I just think there are better, easier trades elsewhere. If anything, I would just have some low bids at around 2700 sats. So fundamentals look fine for SNX. I don't think it's going anywhere. The inverse synths are very useful for traders like me who want to have opportunities to short the market when the time is appropriate. Transaction counts, active addresses, Google Trends all are declining as ETH fees are rising. So the big thing is if ETH fees get cheaper again, we may see players move on to SNX because activities on SNX become profitable to do so again. So that's a really big key component here. Technicals look okay trend-wise. It's kind of a wait and see on the USD pair, and the BTC pair looks neutral to bearish, if anything. So let me know what you think about SNX in the comments below, and happy trading.